All right, can you hear me?
Oh, yes, sir.
Yeah.
All right. Hey, everyone, just want to make a big shout out to everyone who's just jumped on board. My name's Justin from the CPC. I'm one half of the other group. I've got my brother Brett here, who's in the room as well. Basically, we're just giving you a little taste of, or pretty much just giving back to the community in some sense of giving you a free crash course of basic crypto trading, if that makes sense. So I'm going to leave it to the bro Brett. He can explain to you. So I'm just going to. Have I already made you host?
I think so. Sweet. Awesome. Well, just like Justin said, we really appreciate you guys jumping on tonight. Just a little bit of housekeeping before we get into it. So, like, I know that we're probably all at slightly different levels of what we know about crypto or charts or whatever. So what we do want you to do is, if you have questions, is to ask them. But I think the easiest way just to keep it flowing is if you pop it in the chat box, and I'll have Justin just manning that. And if he sees a space in what I'm presenting to ask me those questions, and I can attack them directly, just so we get a bit of flow in here. So we'll probably look at spending about 30 to 40 minutes on that, and then we'll open up the floor to some Q&A at the end as well. And I think we just got a couple of announcements to make at the end too. So yeah, I hope you guys are all excited. I'm gonna share my screen and we can crack into it. So just a thumbs up if you guys can see my screen. Sweet, awesome. Cool. So if all this is new to you, this is a chart. So in terms of crypto and even the stock market, what we can use is TradingView. So that's what I'm on. You can get yourself a free account. There are pro accounts, but pretty much to me it's unnecessary. I think what you need to do on it, you can do pretty much with the free account. So what I want to do is start off breaking down the chart a little bit. So we're just going to really focus on the meat and potatoes of what's in this sector here. We'll touch on a few of the tools, but not too much tonight. I reckon that can be saved for another night. Don't want to overload you guys too much in one sitting. So I'll just expand it a little bit. So what we're looking at on the side here is the price. So we'll go back to the beginning. So up here is the pairing that I'm looking at. So this is Bitcoin versus the US dollar. So you can look at and analyze a wide variety of tokens, or coins, or stocks, or any sort of asset. So if I click on a different one, it's going to pop up, and you can see that it has a little symbol there for that. Now, what's next to that is our time frame. So if I click on this, it gives me a whole range of time frames to look at. So currently I'm sitting on the daily time frame. So what that means is each of these candles on the chart here represents one full day. And then from here, you can change your style of candles, but we're not going to worry about that because for me, this is the easiest candles to understand. So in terms of the chart here, like I said, we got the price on the right-hand side here. We got our candles in the middle, and down the bottom is our volume. So what the volume is the amount of action. So for a trade to occur, we're going to have people that are buyers, people that are sellers. The larger these bars are, is the more trading action that's going on. So the low bars, there's not a whole lot of trading action going on that day, compared to the bars where it's a lot higher here. So volume is the amount of interest in the market at that time, depending on which time frame you're on. Cool. So in terms of our candle, each candle's got an anatomy to it, like just like our body does. So it's got its main body here, which is, let's go a little bit bigger. It's got its main body here, and then we've got these wicks on it. So we'll use this candle here. So on the 20th of July, this top part of the body here was the opening price of the day. So up the top here, when you hover over it, just up here, gives you the open. So the O is the opening price. The H is the highest price of the day. The L is the lowest price of the day. And then the C is the closing price. So on this candle here, the opening price was 30,845. And then the highest price was 31,059. So what that wick represents is the fact that the price opened here, it went up there, just a fraction higher, and then it came back down, all the way down to the lowest point of the wick, and then it pushed up a little bit, and then it closed right at the bottom of the body there. So that is what represented that whole day of trading. So this, remember, this is a daily time frame. So that's 24 hours of trading. So opened here, price pushed up, dropped all the way down, and then closed here. I can even make that a bit bigger. So, and then once that closed, if you just move straight across, this is the next daily candle. So the close of that candle is the same price as the open of this, because it just transitions straight away from that day into the next day. And similar to the price action of this one, so we had the open here, we had the price slowly, well, not slowly, sorry, slightly dropped down, then price pushed all the way back up, and then came down and back a bit and closed here. So the difference in the colors is a red candle means that the closing price was lower than the opening price. And we can see that in the numbers. So 30,845 was the open and 29,791 was the close. So obviously the reverse of that is a green candle. So price opened at that 29791, and then the price closed at 32,800. So what that allows you to do by having the colors is you can see easily when price is moving up, when price is moving down. Cool. So in terms of understanding the chart for now, that's where we can sort of just take a little step back. So you're either been in crypto for a little while or it's completely new to you, and wherever you're at, that's fine. So what you can do within the space is you can have two different methods of how you want to accumulate your cryptocurrencies. Okay, so we've got a trading side and then we've got an investing side. So trading side is essentially the only difference is it's a lot more active. So you're looking to get into a position, get out of a position, and then move on to the next one. So just having a look at a couple of questions before we get deeper. So on this candle here, when it means it's closed, it just means that 24-hour period is finished, and then we're starting the next 24-hour period. So that's where crypto differs from your traditional market. Like traditional stock markets, they have a time where the market stops trading. Crypto doesn't stop trading. It just means it's moving from one day onto the next day. And that was answering the question, but that was a good question. So thank you for asking that. So remember, if anything pops up, just ask them. Cool. So trading just means you're a lot more active. So you're looking to buy, sell, and you're just taking the profit on the difference between the price you get in and the price that you sell at. So let's say, we'll keep the numbers simple. Let's say I bought right at the bottom, right at the open of this candle here. So I decided to buy Bitcoin at 29,791, and I just bought one full Bitcoin. We'll just keep it numbers simple. And I've done all my analysis, and I decide to keep holding it, and then I sell Bitcoin right at the top of this candle here. And if I look at the numbers here, the close of this candle was 42,200. So if I measure that, that is a $12,400 difference. So by buying at 29,000 roughly, and then selling at 42,000 roughly, I've made $13,000 on that. So I bought it at 29, sold it at 42. Okay. So now I have $42,000. So I've sold it. And then I wait for the price to drop back down. And then I can buy back in that Bitcoin. Let's say I would buy back in at 38,000. So because I sold and I walked away with 42,000 and price is now 38, I can get slightly more than one Bitcoin. So I had one Bitcoin before, I bought it at 29, I sold it at 42, and now I'm buying back in at, let's just say 38,000. So now I'm going to have slightly more than one Bitcoin. And then let's say I sell it again at, what's that price there? Let's just say 48,000. I sell it at 48. Okay. So now that I've got more than one Bitcoin, let's just say it worked out to be 1.1 Bitcoin. That's not the exact numbers. I'm just trying to keep it as simple as possible. So 1.1 Bitcoin times 48,000. I now have $52,000. So because I'm looking at getting in and out of the market at different price points, I can increase the amount of Bitcoin I have, and that's what we call trading. So it's a lot more of an active strategy, but it's also a lot harder as well, because you've got to do all this analysis. And essentially what trading is, you're trying to play probabilities, but you're not always going to be correct. Okay, so you're trying to get the setups that are high, got the highest probabilities, but nothing is guaranteed. And the other option is what we call investing. So you're looking to buy, and we'll go back to the example of buying in at this $29,000 mark. I might have decided, right, I'm buying one whole Bitcoin, and my time horizon that I want to hold it for is 5 years. So I'm not going to go in and out of it. I'm just going to buy it, sit on it long term. And that's my investment strategy, to see where Bitcoin ends up in 5 years, because I've done my research on it. I'm confident that it's going to be an asset that keeps going up over time. And I just want to buy it, put it away, and just come back and visit it in 5 years. I saw a question pop up. We'll just have a look at that. Cool. All good. Okay. So there's some people that are just traders. There's some people that are just investors, and then there's people that are both. Now, if you think about the strategy of trading and how you've got to try predict these swings and get in and out, it comes with a high risk of just being in and holding. So if you were doing both, you should have the higher percentage of your money in the investing, and then have a certain amount that you want to trade with, because you can actually make losses. Okay, if you're not sure what you're doing, it does come with a lot more risk. I saw a couple more questions pop up. Cool. So one method in terms of investing that we do have is called dollar cost averaging. So that just means that as price goes up and down, you just have a fixed buying schedule. Like you might just buy every week on your payday. You might just allocate $50. So no matter what the price is, you're just buying automatically out of your pay throughout the year. And then because you're buying at different prices, over that year, you have an average price that it costs you to buy. Okay. So essentially, let's just do a couple of numbers with that. Make it simple. So if I bought one Bitcoin, let's just say today I bought one Bitcoin for $20,000. We'll just keep them nice round numbers. I paid $20,000. I've got one Bitcoin, and then next week Bitcoin is $30,000, and I buy another one. So I bought one today, also one today, yep, and then in 1 week I bought another one. So I now have two Bitcoin. I paid $20,000 and $30,000. So all up, I've spent $50,000. So $50,000 divided by 2, because I have two Bitcoin, the average price I bought at is 25. So that's what we call dollar cost averaging. So in the example I used before about buying every week, you would have 52 different points that you bought at. So your average price would be, let's just say you spent $52,000 over 52 weeks. Okay, so you're putting in, what's that, $100 a week, and then you walked away with whatever Bitcoin amount of Bitcoin. Let's say it worked out to be 2 Bitcoin in total. Your average price for your Bitcoin would be 26,000, because you put up 52,000 across the whole year. You walked away with two Bitcoin, so 52,000 divided by 2 equals 26. So that's what we call dollar cost averaging. So a lot of people do that, and then what happens is they might have extra money come available, like larger sums, that they want to put into the market as well. So what we want to do is just go over a few things today before I get onto the next part. Just look at these questions. Is that what everyone means by HODL? Hold. Yeah. So HODL just means hold on for dear life. That's the little meme about it, but yeah, it's just holding long term. The E flags on the volumes, that's just the indicator I have. So we don't need to worry about that for tonight. That's something we can get into if we progress the series through here and we get a little bit deeper into like higher what's the word I'm looking for? Like more in depth with the trading side of things. Okay, so what we can do is we can actually look for trends in the chart, and this can help us in the times where we might have that little bit of extra money to put into the market. So what we can actually use is on the sidebar here, we have different drawing tools. So the top one here is, if I click on the line here, we have just a different variety of lines and angles. So what I want to do is I want to use a horizontal line. And then once I've clicked on that, all I need to do is click on the chart and it'll draw me a horizontal line. So that goes across the whole chart. So what this allows me to do is back through December into January, Bitcoin had a bit of a run up, and on the 8th of Jan, it reached about 40,500, and then we had a bit of a down movement. And then even when we pushed up here, I'll zoom in a bit more. Even when we pushed back up to this price here, this candle here, go closer. This one here on February 6th, that did push up to that point, but didn't close above it. Okay, so what this is called resistance. So what resistance means is we have people selling into that price. So we pushed up here, people started selling, and that's why, and the people selling was stronger than the people buying, and that's why we had a push in price back down. And then even on this day here, we had price come up, but the sellers ended up pushing the price back down, and then we eventually broke it here. So resistance, it can be broken, and so it can support. So support would be the same thing, but would be down at the bottom. So as we're pushing down, there'll be support in the market or at that price there. So resistance is at the top, so we're trying to go against it, and then support is something holding the market up at the bottom here. So what these can do is they can give you good ideas on when to put that extra money in. So if we zoom forward, Bitcoin from when it broke out through here, it was sitting above that point. Okay. And then we had a bit of a drop back down. And as you can see, price actually hit that. We can see that price was really coming up and hitting that point and couldn't get above it. And so we hit it, came back down, didn't quite get back up to it, hit it, came back down. And even then we broke above it briefly, but came back down and then finally had a push up. Okay. So to me, if I was looking to put a good chunk of money, I would be looking to see if Bitcoin would push down here. And if it held it, let's say, hold on, let's see if I can draw. Let's say Bitcoin price came down to here. It's not very thick, is it? Yeah. And then it had a bit of a bounce off. I would buy around this area here. So I wouldn't buy right at the bottom because as you saw here, it did break through. I'd wait to see if it bounced off this support level. So remember over here, so over here, this was resistance because we were sitting below it and we were trying to break through. But now we've come above it, it's now support. So it's sitting under where the price is at the moment. So I'll be looking for that to hold, because if it didn't hold, we could push lower in price. So I wouldn't want to be putting a big chunk of money in here. So I'd rather not buy at 40,700 with a high chance of the market going down, or a 50-50 chance, because we're not sure what's happening at this support level. I'd rather buy at 42,500, knowing that there's some strength in the market and the buyers are coming back in and they wanted to defend that price and not let it go below there. So I'm sacrificing, let's just say 5%. So not a huge percentage, just to make sure that there is some strength in the market before I buy. Or alternatively, another strategy is, and the reason I'm giving a couple of strategies is because everyone has a different risk tolerance. So some people are a little bit more risky than others. Some are a lot more conservative. What a riskier person will do is, if price did come down to here, they might put, let's say they had $10,000. When price hits that point, they might put $3,000 in, even though they haven't got any confirmation that the strength is coming into the market, knowing that they've got $7,000 to put in if price comes back down. Okay, so the next area of interest I'll be looking at is just under here. The reason it was just under here is because we had that little dip in the market before we pushed up. So let's say we did break through here and then price hit here. Again, the riskier person might put another $3,000 in at that point. And so they've got $3,000 in at 40,500. They put $3,000 in, let's just say 3,800. Sorry, 38,000. That still leaves them $4,000 if price does go lower. And they're going to, again, remember the average price is going to come down if you buy at lower prices. So me, myself, I would prefer to wait for a little bit of confirmation of strength. But again, that is a decision you would want to make based on your risk level. Okay. So that's what we call support and resistance. So just remember, the resistance is when price is under a level and it keeps bouncing off it. And support is when price is above. So if we go back at certain times, and sometimes it's not a deadline, like it can be an area. So to highlight that, like Where is it? So we got like some quick pushes down here. So remember the wick, the price dropped down there and then it eventually went back up and closed. So you can see like the resistance and everything's not always like a fixed line. It can be quite an area. So this area range here is about $3,000. So again, it might pay to use areas rather than deadlines. But I mean, you can start to look for these trends yourselves, and you can put lines in. So that's the wrong one. So even here, oh, that's not right on the money. So even here, we had a little bit of resistance a couple times. There's a little bit of support. It broke through. Sorry. It did break through, but it went back above, and then it finally took another effort to go back down. It bounced off here. So you can start to pick up these points where the market likes to essentially pivot off. So we're going up, bounces, pivots, comes back down, bounces, pivots back up. So the areas where the market just turns, whether it's temporary or permanent, that's another story. So you can just start to look at the charts and try to find these areas where the market likes to bounce off, either bounce down or bounce up, and that can be where you look to do your buying. And it can alternatively, like if you're trading and you don't want to trade like day to day, but you want to trade bigger moves, it can also give you an opportunity to sell. So let's say you bought, all the way back here and you had this price rise up, and as your first time in the market, you hadn't experienced it before and you didn't take any money off the table, and then Bitcoin pushed back down. So you got in at a bit, we'll just say $10,000. Now what you can do is, even though you're still up because the price is sitting at 30, you might be like, oh, I want to wait for a good time just to take some money off the table. So that's when you could wait for the price to push back up, and you know, oh, this is a resistance area. I'm going to sell a little bit here, knowing that I might get an opportunity to buy in. So again, if you're wanting to be a little bit more risky, wanting to increase your chance of making more Bitcoin or more Ethereum or whatever coin you're interested in, you can start to implement these strategies, and you can just look for simple support, resistance, buying and selling. Okay, so you want to sell on resistance and you want to buy on support. Cool. So just to add one more term in here, this is what we call horizontal, because this line is just a horizontal line, or this box is a horizontal box. Now, markets are all about energy and flow. So because money essentially is a form of energy, and also the markets play on our psychology as well. So we have fear and greed, again, which is energy. So it has all these flows, and essentially it forms trends as well. So another way you can look to play the market is we can have diagonal trend lines. So again, we're going to have our resistance and our support, but rather than just horizontal lines, we're going to start to work off diagonal lines. Now, these trend lines are subjective, like everyone will draw them slightly differently, but what you do is you find your style of drawing it, and then you stick with that, and eventually it will pay out. Like sometimes it's a bit of give and take, and you've got to rework them a little bit. As long as you're not changing them too much, generally they're going to be all right. So essentially what you're looking for is 2 or 3 touch points. Okay, so what I mean by that is what's a good example to use? Okay, so I'll draw a trend line here. So the trend line I'm going to draw now is a support trend line. So this one is going to be from below price action. So what I remember, I said I want 2 or 3 touch points. So there's a couple. So now is where it gets subjective, is whether you just want to use the bodies of the candle or if you use the wicks. Now, some traders do, or some charters do. Some charters just use the bodies. Some just use or go off the wicks. I like to go with a mix of both. But if I'm going from a wick, I'll go to a wick, which is just the bottom here, and then there. So I'll just draw it past. So let's say all this price action, let's say from, well, let's just focus on this area for right now. So Bitcoin price is sitting here. No, that doesn't make sense. Let's say Bitcoin price is sitting here, sorry. So Bitcoin's come up here, it's come down, it's tested this line, and then we've pushed back up here. So we're now sitting at this point here. What I'll be looking for is when Bitcoin breaks through this line. So it breaks through here, but it goes back above. So essentially, you want to think of that as a warning sign, okay? Is that it has broken trend and we're starting to lose some momentum in the market. Yes, we pushed back up, and then we've had our second warning sign, and then price did move sideways with a little bit of a push up, and then we had our drop. So the market does give you these warning signs. Now, again, another thing to factor in is with these trend lines, the steeper it is, the less strength it has. So an example of a stronger trend line is something that's a little bit more shallow. So where can I do that? So if I start from here, I go across here. So this one's not as steep as that one I had drawn before. So that signals a lot more strength. So to break that is a much stronger warning sign than when you have a steep one. And then if we back test that, you can see once we broke through it, again, the market likes to give you a warning sign first. So we broke through, we came back up, gave us a second warning sign, and then boom, we had that drop. So you can use these diagonals as a way to gauge the momentum in the market. So as prices are pushing up, if it's got high momentum, it's going to stay above this line. As you can see here, it had high momentum, and then it lost it, came back down, but then strength came back in, and the market got momentum again, and we stayed quite high above it. But then we started to lose momentum again, and eventually the market went the other way. Okay, so we can use these diagonals to give us an idea on the momentum.
Hey, Brett, I just got a question here from Ellie. Does it usually give you 2 warning signs, or it varies?
It can vary. It can vary, depending on how weak the market is and how strong the sellers are as well. So, I mean, how weak the buyers are and how strong the sellers are. So like here, I'd say that there's still some strength in the buyers, and they could fight back a little bit, but then they eventually lost their steam. And sometimes you might only get the one warning and then boom, down. And sometimes you don't even get a warning, it might just go straight down. But one thing to look out for is if you do get that push and break through the line and it comes back up, that is your first warning to start to look at maybe taking some profits if you're a trader. And again, this is going back to if you're looking to have a little bit of activity in the market. Okay, if you're looking and you're buying Bitcoin to hold for 5 years, you don't need to worry about this. This is just if you want to come up with some strategies to increase the amount of Bitcoin you have without always having to just put money into it, if that makes sense. Because if you go back to the example we had before of when I bought 1 Bitcoin at 29,000, sold it at 42, and then bought it again at 38, I increased the amount of Bitcoin I had, and I didn't have to put any more money into the market. So that's why you would trade. Okay. And essentially this strategy here is more for the trading side of it, whereas the horizontals, which we covered before, is a way to find areas to buy with larger amounts of money, if that makes sense. So like if I again was still looking to buy for the 5-year line, I might have my $100 a week that just automatically goes in, but like I said, I come into some money. I have $1,000 that I want to chuck into the market, and that's still money that I want to sit for the long term, 5-year timeline. I just use these horizontals to help me find a better buying price, because ultimately, like I guess at the price point Bitcoin's at, it might not matter as much, but if you're looking at some of these other coins, let's say there's a coin you really like that's currently sitting at $2, and you come up with that $1,000, and you just go all in and you buy it at that $2 mark, you'd get yourself 500 in, right? But if you use these horizontal lines to do your purchasing, and let's say price is up here, and you use this trend line to buy some, it broke through, yep, okay, then you're looking at this area for you to buy your next lot. So you might, prices here, and let's just use this as an example. This dotted blue line is $2 for this coin that you want to buy. If you use all $1,000 in, you got no money to buy at this price here, right? Or if it goes down here again. And let's say this price is $1 and it did come down here. Even if you just went 50-50, so I put $500 in here, that's going to get me 250 of the coins. Price drops down to here, and it's $1. I've still got $500. So then I can get 500 coins down here. So now I've got 500 here, 250 here. So now in total, I've got 750 coins rather than putting all my money in here and only having 500. And then let's say that the coin goes to $10. Instead of having just 5,000, I now have 7,500. So in the long term, getting these buys right can have a big impact. So that's 33% more money on the long term you have by using these supports and resistances to do your buys. Okay, because it's all good liking a coin and just going out and doing that that weekly buy, like scheduled, that's fine. But with these larger amounts of money, we need to be a little bit smarter with how we purchase. Like we don't want to be going and buying, where's an example? We don't want to be coming in and buying at this point here, right? The market has just gone all the way up here. If I'm buying after it's gone up 7 days in a row, like it's just not smart. Like we need to be smart with how we put our money to work. Like yes, price did go up here, but that's only a few percent, 7% higher. And the market gave you an opportunity to get back in here, right? So we don't want to buy on those green days. We want to find support resistance areas. Like you can see, if we go back here, the market will, it likes to go to areas where money has been before, like where there's been price action before. The market always likes to go there. So it's not always going to be like perfect. Like, it's crazy how the market works. See, like, we had the price break through there, come up, and look at this candle. It pretty much comes down right down to the line, bounces back off. So you could have had a buy-in opportunity there. Yep. Like, it's a previous area of where the market pivots from. Could buy there. It's still smarter than buying up here, right? Price went up and it did come down a little bit lower, closed back above, came back lower again. So then you could have taken another buy here, but first you'd go back and see if there's areas of support or resistance. Well, do you know it? Price did go below it, yes, but it didn't really close. The candle didn't close below it, right? So the market does leave you clues, and it's just about going out there and looking for them. And something as simple as just drawing these lines will give you your good buying prices. So if we analyze the percentage difference, so there is a 33% difference in buying price here. Okay, so if I bought it 55, that's 33% higher than buying it at 37, or roughly 30. Okay, so if you go back to that $1,000 mark, let's just round this down to 50, for example. You can only buy yourself 20. Is that right? That's right. Yeah, 20. So if you bought it up here and you had $1,000, you could only buy 20, right? But if you buy it down here, and let's just round that number down to 33, just to make it simple, you could get yourself 333. So that's quite a big difference, right? Like, if you factor that this market is still going to go higher, and you can get yourself 333 coins instead of 200, like, why wouldn't you? Like, it's just about training the psychology side of things of not buying the green, because that's when all the hype is. Like, we want to buy after it's had a down move, because the market does have periods where it goes up pretty quick, but when that happens, it always gives you an opportunity to get back in. Okay, like, obviously it's not as cheap as down here, but you can still position yourself better than just buying up here, because you've chased all the hype. Like, it's had a cool off, it's gone higher, and it might even come down here again. So again, buying up here after 4 days of price going up wouldn't be smart. All right, so price dropped down 20% from up there, and if you factor in the wick of the candle, that's almost 30% right there. I see some chats coming up.
Yeah, we got Ali Sally. So straight after the big hype is a good time. Makes sense. Yeah, that's correct. Bang on.
Yeah. So you want to wait for it to cool off a little bit. If you're buying in the hype, like, you're gonna play the risk of getting burned. Like, you've had hype here, and you might buy here, which isn't much higher than this point buying here, and it's actually lower than buying here, but you just don't know when it's going to turn, right? And buying here, like, we've got this resistance line, you didn't know if it was going to break through it or drop back down. So you want to draw these lines, and you want to avoid buying in the middle of ranges. So see how we got the price bounced up, dropped down pretty heavy, and sitting around here, we're sitting in the middle. Like, there's no really support or resistance. If you go back here, like, you don't want to buy in the middle here. You want to either buy at the break of this, or you want to wait for it to come back down. Okay, so we want to avoid chasing that high. And something as simple as lines, horizontal lines, gives you an indication of areas of interest. Okay. All right, I think maybe 5 more minutes.
All right, we got a question from Tua. Be like, if it rains for the next 4 days, then surely it won't rain on day 5, 6, but a more estimated guess. What do you say about that, Brett?
Yeah, that's right. Like I mentioned at the start, we're just trying to play the probability. So the more something runs up, the more likely it is going to have a period of cooling off. I think there's a common saying in trading, or it's called, if it's fast, it doesn't last. So stronger charts are ones that progressively go up. You have a little bit of an up movement, slight dip, up, slight dip, gradually stepping up rather than just going rocket ship up. It often doesn't last. One last thing I wanted to touch on. It ties in with these supports and resistances. Let's go back to Bitcoin for it. So remember how I mentioned that the market is about energy in terms of money flow and money changing hands, essentially, or in this case, crypto hands. So, and we touched on how this volume gives you an indication of how much is there. So the higher the bar, the more action going on in the market. The lower the bar, the less action. So that can give you a gauge on support and resistance. So, like if you think about, you've got a wall of a house made out of cardboard. It's not going to take much energy to break through it. But if you've got a wall of a house that is made of brick, it's going to take a lot more energy and force to break through it. Okay. So going back to this example, we had quite a few bounces off this area here. So to me, that is quite a strong resistance, because we've had several times where the markets come up, bounce back down. So obviously to break through it, we're going to need more force. And if we can get our gauge of our force by looking at the volume. So we've got a perfect example in this area here. I'll just draw. And this will be the last thing I touch on, because I know there's been a lot of information tonight, and then we can just do a few questions at the end. So just in this area here, you can tell I'm an artist. All right. So see this volume here? This coincides with this candle here. And as we're pushing up on these days, so going from this candle to that day, to that day, to that day, we look at the volume. It's coming down. So we're starting to lose momentum. Okay. And yes, this candle did break through it, but we couldn't hold above it because we were losing momentum and we didn't have that force to sustain a drive to go above that resistance. And then as we were coming down, there was a little bit of increased momentum on these selling days. So the volume pushed up for a couple of times. That one was slightly lower, but the overall trend of the volume was increasing, so we could break through it. And then it took a lot of strength from the buyers to come back in. And the difference between this push up and this push up was, look at the volume here, we're trending up. So there was an increase in the force to break through it, and we sustained it. So when you're approaching support and resistance, you want to look at what the volume is doing, because that's going to give you a gauge. Like, it's not going to be 100% perfect, but it's going to give you the higher odds of whether it's going to break through the support or resistance, or it's going to bounce off it. And see how it's not perfect. Like these two candles that pushed up, the volume was increasing, But sometimes the sellers just step in and they're a bit stronger and they were able to force it down. And that's why it's always better to wait for that confirmation. Like I said to you back here, if price came down here, I'd wait to see for a bounce before I bought. Where I was saying some people are riskier and they would just buy it at that level. For me, I'd wait for a bounce to make sure it didn't. If it broke through and then came back up, it might be a good time to buy there. So there's no one clear, hard, fast rule. It's just about applying these strategies on what you feel is best for you. And again, like I said, nothing is guaranteed. We're just looking at probabilities. Let's see if there's one more example. So here's a prime example here. So we're pushing down here. This candle, this candle, this candle represents these 3 bars of volume. So it was increasing, then it had a drop off, and then one strong push. And then we had a bit of green, but it couldn't sustain, and then we just went sideways. And another example here, started pushing through, increased in volume till we got to the support line here. So this candle represents this volume bar here. And then we did go below it, but once we started to get below it, you can see the volume dropped off, and that gave the buyers a chance to step back in. Okay, so it's just about looking at the energy, the momentum of the market, finding these points where the market likes to pivot, and that energy, whether it's really accelerating in volume as we approach it, is going to give you an indication of potentially breaking it. And if it's decreasing, there's a chance that it's going to bounce. So these are things that we can start to look at when it comes to putting in those larger sums of money for that long-term investing, or if we're wanting to trade. Now, there is a lot more to trading than just these lines, but in terms of getting practice, and you don't even have to put money into it, you can paper trade. So paper trade just means I could write in a journal. Where is it? Here. I could write in a journal. Bitcoin bounced off this support, closed here. I would have bought at 51,300. Bitcoin price closed up, came back down. There's an example. I'll do this line in here. Came back down, closed below, broke through this the support, closed below, and I sold at 60,000. So you'll just write that in a journal, and that's a paper trade. You didn't put any money in it, but that's a way of you getting practice in the market. It's just like a pretend trade in a sense, but it's giving you that practice without the risk, and that just builds up your trading arsenal. So that's one way to practice. So I think we might leave it there.
Does anyone in the chat room want to say anything? Leave a question, or I know there's probably a bit to take in, but man, it's awesome to give this sort of space for those who are just wanting to get into trading. So yeah, let's leave the floor to you guys, and let's see what we can get out of you.
Like, if you're not confident in speaking, just drop it in the chat. That's fine. Ali, what do you mean by trade spot? Do you mean like where to trade, or? Okay, so there are several different exchanges that you can use. So one that I use is Binance, and I'm starting to use another one called FTX more. So if you guys are interested, now in saying that, like, you can also just do your purchases there for your long-term investment as well. If you guys don't know where to buy, what we can do is reach out to the CPC page after, and we can send through some links to some areas you can buy, or sorry, some exchanges you can buy from, and you can trade with as well. So we do have a few platforms which are easier and a little bit more user friendly, and then we've got some that are a little bit more complicated. If you haven't traded before, like navigating the screen and how to place the trades can be a little bit difficult, but what we can do is we can help you with that if you guys are interested with that.
Just want to make a shout out to Dom and the bro. Oh, I'm getting my bloody chat up. Sorry for this. Dom, Dom, Joey, Sosh, yeah, appreciate that, guys. Thank you for that. Lomi as well.
Yeah, we appreciate
Oscar
your guys'
as well.
support.
Yeah, man. Like, spread the word if you can, man. I mean, this is the reason why we started this platform, was to educate the masses in a way where they're not getting fucked over. We probably know that we're aware that there are people in the community that are doing pyramid Ponzi type schemes in terms of trading and stuff like that. So, like, this is a perfect time to really break that negative notion of trading and put it back to where it should be at. So this is what it's all about. So thank you to everyone that's actually taking the time to listen to the bro Brett. And yeah.
I think one thing I will say is, like, if you feel a little bit overwhelmed and that there's a lot to it, it does take time and practice. I have been trading since 2018, and like it's probably been the last 12 months that has really come on. And like I said, I'm not 100% on my trades. As we get deeper, because I really would like to run more of these masterclasses. As we get deeper into it, as what we learn is it comes down to what trading essentially is just risk management. So we just got to protect our money, and we got to look for these setups that reduce our risk to the downside, but give us the most potential to the upside. So that's stuff that we can get to, but like, just be patient with it. I think the main thing is, if you're going to do a split, put 80 to 90% of your money for long-term investing if you're interested in the crypto space, and then just 10 to 20% for the trading side of things. Yes, start with that paper trading, but then you do need to have a little bit of skin in the game eventually, because when you play with real money, the psychology of it is a little bit different. And if you guys are interested and want to learn more, we actually will take you through how to set up trade journals. And essentially what that does is it takes the emotions out of it. You just plan your trade, and then you trade your plan, and you just stick to it. But yeah, I think that's it.
Sweet as. Man, we just want to say thank everyone for jumping on board. And we're probably going to end it there. But before we do take off, I will announce something tonight, that we're also hosting Lord Fussy Tour tomorrow night on the CPC on IG. So that's going to be a really biggie one. Reason being is because if you never heard of Lord Fussy Tour, he's actually the Chancellor for Tonga. He's actually trying to make Bitcoin legal tender before, probably hopefully by March next year. So he's got a very insightful story about his journey, how he got into crypto, how he almost lost his life, but it was actually the life-changing point to where he's at now. And we've got a couple of events we're going to be announcing as well in the Twitter space. So another thing as well too we wanted to announce was we're also promoting, I don't know if you guys have seen it on CBC, but we've also been promoting our Prosperity Squad. That's a little bit of a more advanced private sort of clientele thing that we do as well. But if you're more than interested, just hit us up. We're more than happy to talk. And we're also doing a beginner's class, which is still in the works. So just give us some time, just something to think about. But if you guys are just wanting to learn the basics, just back down to square one, then yeah, man, hit us up, man. We're more than happy to help you guys out. So yeah, on behalf of myself and Brad, we want to appreciate you all for following us. And yeah, man, spread the word, man. We need to get this out there for everyone. And yeah, man, that's what's up.
Yeah, thanks again, guys. Like, really appreciate giving up your time. And like Justin said, we are looking at getting this beginners course up and running. Now, the strategy of that would be to get people that are fresh into it up to speed and then ready to join in with the Prosperity Squad, because that's where we go, like, we go quite deep in finding projects for the investment side of it. And this crypto space is quite deep, so we look to take you guys deeper with us, but there is a level of understanding to get to that point. So more details will come about that, so just stay tuned. And like I said, I definitely do want to run these master classes more frequently just to help everyone out. Sweet.
All right. Thanks, everyone. We'll catch you soon, and we'll probably see you back at the CPC. Cheers, fam.
See you later.